We're ready to go. It's E. Giuliano, and today is the 28th of April, USDT. You know, this pirate chain situation is just getting started. We're going to look at our USDT, see the developments in this, what's looking like a corrective pattern. Ooh, exciting things are literally shaping up. And I want to take you through some of those ideas. This is a quick video to catch us up on what's going on here with this 4-hour chart in our USDT. We are currently sitting at the roughly $8 level. And we are midday UTC. So, well, you know, this situation here is looking like a triangle is playing out. If we come in closer, we are noticing, okay, we were wondering before, is it going to go up? Is it going to go down? And the bias felt down, and it's looking like that's exactly where we're going. So far it's playing out. I don't see why not, let's say, a bounce down, a touchdown to the 675 area-ish, maybe less. Let's go to these bodies and be hopeful here. So $7 seems like a fair level. If we're breaking the, and we can even, if we want to be more situational, we might say it like that. Okay. Just readjusting our understanding. So this doesn't count as a touch here. So we're like at a 1 touch, 2 touch, 3 touch, 4 touch down here, and maybe 5 touches out. It's an interesting shape that's shaping up. Now we still have this $5 level in play, $5 level in play, which might over the long term. See, this is a 4-hour chart. And this is only until 2nd of May, this vertical line. So one option is we play it out here. We play it out here. We come down this way, and then maybe we come up. We touch the cloud. We come down, and then we go up further. This is into May. Other option is that, let's say, instead, when we come down this way, we break down further. We break down further, and maybe we end up coming down this way. And instead of being more, of a triangle correction, this ends up being a more like a zigzag correction. Okay. And that zigzag correction still plays into a larger potential triangle move. Now, if we are looking at something like that though, then this better hold. Otherwise, the mid $3 level is really a strong target for support and also for picking up. So the ideas here that we're probably thinking about are about where to jump in. Let's say you have fresh fiat, right? When you look at the USD chart, it's like, okay, you got fresh fiat and you want to get some in and you want a DCA. So here's a good level. For sure, $6-7 level is a good level, but you really want to watch it, because if it doesn't hold, then we're really looking at this mid $5 level. Although, at this point here, you want to give it a bit of leeway. But let's watch it work. Let's hope it works its way through this channel. That would be a nice long triangle. Another option, okay, is now that it's here, yeah, exactly. It would basically get our trend line a little bit more, let's say like that, right? That would become our triangle shape ultimately. And that's a possibility. And here we're still talking 4th of May. You see what's happening here? Now, if it goes down further, yeah, I don't like it there. I like this base better. If we break this 6 level, I don't like 5 is the psychological level. So sure, no doubt. But by that point, we might as well wick down to 3, you know? That's that for that thinking for now. And then when we just look at a couple helpful indicators here, we see, yeah, most likely a little bit more rounding down, and that's cool, no problem. But it also looks like it might clean it out and help us to get a bit more of an upward bias, and that might create that channeling, and that's really what we want. Let's again look at the Bollinger Band. RSI as well, we don't mind. This is a 4-hour chart. We don't mind it making its way down further. Either way. And then what else we're thinking of here is in this Bollinger Band now, okay, if we pay attention to what's happening, this is a 4-hour chart Bollinger Band. So we are starting to wind up a little bit, right? More than we were before. I think, did I disable? No, the moving averages are there. So if we look at this Bollinger Band, okay. Sorry for all the, let's hide the drawing tools. If we look at the Bollinger Band, okay, we're starting to squeeze. We're biasing to the downside. We just had a huge upside bias. More likely that we test this downside of the Bollinger Band and come further down. So where does that leave us with our drawing? Yeah, why not? Why not? Why not come here and then, goodness gracious, are we going to even follow the yellow? Very likely. So your $5 level is possible. But you know what? Even better would be if we start channeling with this Bollinger Band and just let it channel, baby. Let it channel. Let it bounce around and channel and wind up and give us some real good strength, so that after we finish correcting all of this, so this is still into beginning of May, right? After we correct into this, we can shoot up higher, and let's take it to the daily chart. At that point, hopefully we can, you see now how it's playing out. This vertical line here is June. We have a lot of days here in May to play something out. If you look at this structure here, we're still only 1, 2, 3, 4, 5 candles into it. In fact, when we look at the daily, we say to ourselves, yes, this 5 level starts looking a lot more reasonable. A lot more reasonable. Because this 20 line, this 20 average has been rising high, and now it will, because of this flattening and downward movement, it will abruptly flatten more. So let's see where it plays out in this area. You know, like we said earlier, let's just start getting, oh, that's what happened. Right, I forgot about that. So yeah, let's see what happens here. Maybe this or yellow, what was called the demand line might not work. This support line might actually become the purple one, and we'll see. We'll see. Okay, stick with it. Let's see what happens. It's an interesting situation. Again, on the daily chart, look, I mean, are we going to continue higher on the MACD, or are we more likely coming down on the daily? So conflicting ideas here in this 4-hour and daily chart. What would be nicest, in my opinion, just to clean out a lot of these overinflated metrics here, is to have some sideways, choppy, non-directional action. And in terms of wicks, yeah, you can probably pick some up decently down here. Why not? Why might it not wick down here? Go for it. Yeah, that's the basic idea for now. And then we see how we start moving into May. Okay, be ready, set yourself some levels. This is the USD. So if you're making that fiat and you want to throw it into some pirate, yeah, looking good, looking good. Because overall, we are just getting started. Let us go to a weekly chart just to get a bigger picture. Okay. Wow. Now when we go to the weekly chart, we start saying to ourselves, okay, what is happening here? See this action here, baby? This is what we want over here. So now we're going to start thinking about time. We're going to start thinking about time. We're going to do a little bit of Fibonacci relationships with time. Let's see if that works. Okay, first time we're trying it. Live and direct. Date and price range. No, wait, we want Fibonacci. Whoops. Time zone. There we go. So let's say, I know I've not used this before, so pardon my newness. Oh, we want it to go the other way, probably. Oh, I see. Yeah, we want it to go the other way. So we're going to do it again. And I imagine we make it to here. I hope this is right. I'm going to research this and I'm going to share with you about it. Okay, we're going to learn about Fibonacci time. We looked about Fibonacci retracing. This is a log scale. So let's just remind ourselves what our Fib retracements are for this move here. Let's take it from the body. The 618 goes to $3. From the wick, the 618 goes up to $6. So that $6 level is definitely in play for sure. Yeah, $6 level in play. And then into time, let's take this. Why not? This end of May time, that could be good. Let's, yeah, we could even retrace back to this 3 level, like just retrace this whole candle, but stronger play would be to not retrace that and to only go 618. And what did we say here? Just one more time, and then we're going to end this stream. I think we're done with this. I'm not even going to go into BTC. We can look at BTC later. Ooh. Retracement, boom, candle, boom. Yeah, so 618 is $6 level. So the $5 level is between, and yeah, 786 is pretty much the lower end of this body candle, and it is at the 3 level. So, you know, play it accordingly. A lot of opportunities here. And then by the time we reach, let's say 24th of May, let's see what's happening. Okay, I'm going to definitely research this and update us on the Fib time. But in terms of Fib retrace, looking good here. We got some time to work this thing out. And this is, remember, this is a USDT chart, so relating to Bitcoin as well. What's Bitcoin going to do, right? Looks like it's going one way one day, another way the other day. We're working towards the end of April in Bitcoin, in BTC, and we're hovering around that, what people are calling a maximum pain zone, because now you've got, you know, longs and shorts and options or whatever. I don't know which market this is. I haven't paid close enough attention to that, but it's basically the futures type of market where dates and prices are bet upon. Yeah. All right. We got a long way to go here, I think. Not a long way, but, you know, in terms of crypto time, let's look at a month here. Let's see how this next month plays out. Stick with me. I hope you're enjoying it. I hope you're learning something. I'm going to get out of here. Oh, let's hide these drawing tools for a second. One last thing to look at on the weekly. Yeah, indecision here. We just came up so much. Doubtful we're keeping going. Look how high we're above the Bollinger Band. 20 on the Bollinger Band is starting to show at $1. Don't be surprised if it comes to $3. Stack that shit. Okay, see you later, friends. Bye, everyone. I hope you got something out of this, because I think I did.